Happy Thursday, dirtbags, degens, and perma-bears. Welcome back to Trades and Gains, where the market's drama is our content. If you thought Wednesday's face-melting rally was the start of a recovery, bad news. Trump nuked that narrative in under 24 hours in true Donald Trump style. The Dow is down over 1,000 points. The Nasdaq is down 4.3%. And the S&P 500 closed at down 4.38%. And we now have a confirmed 145% tariff that we have put against China. Woo! Let's go ahead and unpack the chaos, folks. So, tariffs. I got some terrific news for you. That was a good one. The White House confirmed Thursday that the U.S. tariffs on Chinese goods have not plateaued at 125%, unfortunately, which seems logical, but of course it's not. They're actually at 145% once you add in the original 20% fentanyl-linked levies. Wall Street had priced in a cool down. Instead, it got a gut punch, ball kick, stub toe, whatever you want to use, and stocks went from green to gutter in minutes. The Dow fell more than 2,100 intraday, and Trump said, "I haven't seen it." That's comforting. Jesus, Donald. We had, again, the S&P down 4.38%, the Nasdaq down 4.3%, and the Dow down 2.5% on the day. The 10-year fell flat at 4.39% after a wild week, and oil is down 5% as demand fears resurface. And that's on top of Monday's $9.5 trillion wipeout. We're now clocking 3 of the worst days since the 2020 pandemic crash. Wednesday, the tariff pause was hailed as Liberation Day 2.0, and that lasted all of about 12 hours. And on Thursday morning, back to the bunker. Tariffs are back up, confusion reigns, and JP Morgan said, "This isn't the end. It's the end of the beginning." Now, the tech sector got absolutely beat up today. Just tech with Nvidia, it was down 5.9%. We had Tesla down 6.4%. We had Apple down 4% and Meta down 3.5%. In the auto world, we had KMX down 17%. We had Carvana down 7%. In construction, DHI, LEN, and TOL all are down 4%. In oil, we had WTI dropped to 5% to $60 with demand outlook absolutely shattered, like the hopes of anyone ever dating Sydney Sweeney because she got rid of the picture of her ex-boyfriend or fiance. Who knows? Anyways, we also had CPI come out at 2.5% year over year, down 0.1% month over month, and inflation is cooling, but the market is still on fire. The bond market, we have the 10-year yield hit 4.47% before retreating to 4.39%, but still flashing warning signs to us. And the Commerce Secretary promised a golden age as stocks tanked. That is a bold statement, Cotton. Let's see how it plays out. Now, let's go ahead and move into our next segment with Investor Central Club, where we break down the options flow so you don't have to get caught up in the bobo. If you would like to sign up for this, feel free to go over to investorcentralclub.com to get your own account today. And you can get real actionable insights that you can take to the bank and to your portfolio. So to kick things off here, we had big prints and big exits in the dark pools. In SPY, we had a $905 million block trade. QQQ, we had $193 million prints 4 times. Yeah, that's 4 times. Apple, we had nearly $440 million in outflow. Microsoft, we had $266 million dump across 2 different prints. And VCIT and LQD, which are flights to safety, had over $400 million in total inflow as well. By the dip, institutions said, yeah, no, we're going to sit this one out. We'll let retail take the losses for this. Now, we did have some options flow in today. In SPY, we had $211 million with $40 million in calls against $171 million in puts, with our most common contract on SPY being the 417, 480 puts with a pretty aggressive price tag on them, if I'm being honest. We saw 446 earlier in the day, and those went all the way up to 100% real quick because we saw them again at 940 at 1230 just an hour later. Now, some other stuff that we had going on, we had QQQ. We had 54 million total, and most of it was in the downside. Well, no, it was actually in the upside. That is not true. If we look at our most popular print for our QQQ today, it was the 475 calls that were due for March 20th of 2026. So someone's long-term bullish out on QQQ. IWM, we had 53 million total with 50 million going in puts, with the 170 puts expiring on 417 or 171s expiring on 417 with a golden sweep at 286. Being our most common contract traded. GLD was also one of our popular contracts of the day with a common ticker, a golden sweep at 290 at the price level of 268 as well. Sweepers went nuts on, or actually only real call buying was GLD and Meta here, and the risk off and hedged bets are what those were made up of. Now, we had some big trades that also mattered throughout the day. We had 5.48 million going to SPY 460 puts that are due on the 12th. We had IWM 170 puts at 4.58 million that were due on the 12th. We had Nvidia $80 puts for 425 at 3.1 million. We had AMD $90 puts at 2.5 million with people hedging chips. And we had the GLD at $230 call with a gold breakout for the believers and safe haveners. Sweepers went nuts on puts, blocks leaned, risk off, and smart money's wearing a helmet. Now, what's ahead? Friday's action will most likely hinge on China's response to the 145% rate hike. Any hint of talks equals face melting rally. No news means the blood will continue, and earnings season starts. Forward guidance is everything now. So that's your Thursday market recap, folks. From optimism to obliteration in less than 24 hours. The tape is twitchy, the flows are defensive, and the smart money is getting out of the blast zone. Make sure you subscribe. If you like this video, comment so you never miss, and turn on those bell notifications because we give you no bullshit breakdowns. Are we buying the dip though, folks, or are you running for the hills and still sitting on that cash like our boy Warren Buffett? Anyways, I will see you guys in the next one. I'm your host, Max Pitts. Have a great day.